What's going on, guys, and welcome back to another video. So today we'll be doing my weekly Trading212 portfolio update. We'll give an overall market overview due to the kind of dip in the market over the last few weeks. We'll also have a look obviously at my Trading212 portfolio, all 33 holdings, and we'll kind of give an honest review of how it's performing. As you know, on this channel we're fully transparent, so I like to share the highs and lows of investing. That's one of the main points of this channel, to give a realistic overview of trading long term. And finally, we'll give my plans going forward to counteract the current market. And with all that being said, let's dive right on into today's video. So in my opinion, there's three main reasons why the stock market has been in a downtrend over the last few weeks. The first of these being an inflation risk. Now, in prior meetings over the last few weeks, the Feds have started to discuss the risk of inflation. Now, if this risk factor continues to grow, the markets will start to become in a fear or a downtrend, and this will continue to drop over the coming weeks if inflation risk continues to grow. The second factor why I believe the stock market is down is because people are starting to pull their capital out of the older school normal blue chip stocks and into kind of cryptocurrencies, etc., effectively dropping the overall demand for normal stocks and dropping the price. So again, I know that Bitcoin and cryptocurrencies are down in the most part over the last few weeks as well. But again, people's capital are still tied up in these cryptocurrencies or coins, effectively dropping the normal demand or supply for the normal blue chip companies. And the third of these points is that people are starting to get a bit fearful in terms of a stock market bubble. Now, over the last 12 months, as I'm sure you're aware, you could literally throw a dart at any stock and it would go up in price. So, for example, we see later on in my own portfolio, some of my stocks are up nearly 100%. So people will start to sell. It's just a psychological factor behind it that when your stocks are up so much, that you do start to fear losing those gains and effectively selling off your positions. So that's probably the third reason why I believe the stock market is currently in a downtrend. So here we are on my Trading212 portfolio. That's currently worth €8,833. Again, I'll just check my phone, but that equates to about 10,775 USD. And for my UK viewers, that's about £7,625 sterling. Now, at the moment, we're currently up about €982 or 12.5%. Now again, 12.5% is fairly good in my opinion for a blue chip portfolio that isn't too volatile, so it doesn't swing too much in either direction. However, only about 2 or 3 weeks ago, we were up about 17%, so we're down about 5% or so at the moment. So all things given over the last few weeks, that's kind of a lot considering it is a blue chip diversified portfolio. Now, as stated as well last week, or was it even the week before, where I said I was going to have a cool off period to kind of look over and reevaluate my overall portfolio. Now, I've done so as well, so again later on we'll discuss my plans to counteract the current market conditions dollar cost average, as I haven't actually bought any stocks this week. So now we'll just have a look through very briefly again, because we haven't bought any stocks, to see how my overall portfolio is doing in terms of sector allocation and my individual stocks. Our communication services pie is currently in the green. We have just under €600 invested here and up 24.7% with two holdings. Walt Disney is up 30%, so I'm quite happy with that, although it was up about 40% only a few weeks back. But again, 30% is still impressive nonetheless. And Facebook is currently up 20.2%. We then have €1,400 invested in consumer discretionary. Now definitely, again, at the start of next week, I'll be snapping up a lot of stock here to dollar cost average down. For example, only one of the three at the moment is in the green in the form of McDonald's, up 7.6%. We then have Nike down 1.6%. Now even next week I probably won't act here as such because it's only 1.6%. However, the top guy here, Tesla, is down 20.9%, which is huge in my opinion. Again, I said in prior videos that I wanted to get my Tesla position up to one full share. I think we have about 0.8 of a share at the moment. But at the current rates, and because it's down nearly 21%, I'll probably even buy one full share extra, and even probably 1.2 to get me two full shares, as really, at the moment, this will pose great opportunity long term to dollar cost average into this company. We then have consumer staples, and it's kind of interesting to show just how important it is as well to diversify across different sectors and different companies, as different sectors react differently to different market conditions. For example, we can see my consumer staples is in the green, up 7%, and we have €1,260 invested. Three holdings here, all in the green. Coca-Cola up nearly 10%, PepsiCo is up nearly 9%, and P&G is up just over the 3% mark. We have €675 invested in the energy sector, which is currently up 2.8% overall, thanks to the bottom two here in the form of ExxonMobil and Chevron, which are both doing fairly well in my opinion, up 39 to 69% or 68.5%. So I'm very happy with how they're performing. However, again, we still have the ETF here, the iShares Global Clean Energy ETF, down 12%. Now again, I've made many videos on this, and long term I think it's a great buy. So because I had a cool off period over the last week or two, that's the reason I didn't buy more. But certainly next week, just like Tesla, I'll be buying more of this ETF. It shows the importance of holding overall ETFs in your portfolio as well. Even when the market's on a downtrend, they still technically ride the waves here as such. So at all times, I like to have between 8 to 10% of my overall portfolio in the two main ETFs. We can see here we have just under €800 invested here, up 20%. The S&P 500, which tracks the top 500 companies within the US, is up 20.2%, and the FTSE 100, which is the top 100 UK companies, is up 19.1%. We then have the financial pie, which is probably my best performing pie at the moment. We have €1,165 invested here, up 34.97%, and all 5 holdings here are well in the green. Visa up 11.2%, MasterCard up 9.5%, JP Morgan Chase up 62%, Bank of America up nearly 70%, and Goldman Sachs up 76.5%. So overall here, although I won't have much opportunity to dollar cost average for a long time, I'm still very happy with the progress in this pie. We then have €920 or so in the healthcare pie, up 16.5%. Johnson & Johnson is up 14.4%, AbbVie up 31.7%, and Pfizer is up 10.75%. Now again, as mentioned in prior videos, the healthcare pie really is a pie I don't really pay too much attention to, but again, I like to have it here, firstly for diversification, and second of all, to give me more opportunities to dollar cost average. One of my smallest pies is in the industrial sector, mainly because the second we bought these 3 stocks, they went up in value fairly fast, so I never got a chance to buy more at the dip. But again, that's not something bad either, I guess. We currently have just under €300 invested here, up 25.3%. 3M is up 21%, Caterpillar up nearly 50%, so I'm very happy with that one. And Waste Management is currently up nearly 22%. A pie that I let subscribers pick, and Chris from Instagram, again I won't mention his second name obviously, but he suggested these 2 stocks here. We only have €82 invested here at the moment. Again, not a lot of money at all by any stretch of imagination, but it's definitely a start. So again, thanks for suggesting those, Chris. And the 2 stocks here, Barrick Gold is up 11.2%, and First Majestic Silver is up 8.1%. We then have my one penny stock pie, although Irish Wealth, another Irish YouTuber, obviously as the name suggests. Again, check his channel out as well, he's a great guy. But he suggested here that I need to change the name of this pie as it's no longer a penny stock, and that's mainly due to the fact of the 15-to-1 reverse stock split on this company. Now at that time my stock was down about 15%, and it went back up to parity, so it gained 15% extra. But then since then there's people shorting the stock, which is no surprise because when it went up 15% or 15 times the amount it was, there was no doubt it was going to start getting shorted. So at the moment it's down 15.6%. Now, although I will be investing further in the likes of Tesla and the iShares Global Clean Energy ETF, which are down similar amounts, I won't be investing further in high tide for another few weeks as such, because I want to see, once the dust settles, where the stock goes. If it continues to get shorted, then obviously the stock is going to go down and down. But again, if it goes back and the dust settles and people see all the numerous catalysts and fundamentals that I mentioned in prior videos and how positive an impact it has on this company going forward, then I'll definitely be buying more. But for now, I'm going to just leave as is and see where it goes. And then my last 2 pies, firstly is the real estate pie, only €65 invested here, 1 holding, Realty Income, and we're up 9.8%. And then we have one of my biggest holdings as well here in form of technology pie. We have €1,358 invested, up just under the 20% mark, and all 5 holdings are currently in the green. Microsoft is up 14.5%, Amazon is currently up 2.9%, Apple is up just under 10%, Alpha Class A broke the 50% mark and is now nearly at the 52% mark, so I'm very happy with that, and IBM is currently up just under 19%. So as we've seen there, only 4 of the 33 are currently in the red. Now again, the whole psychological factor behind this, but I know once it says €983, it looks a big difference if you added €17 here and it gets to the 1,000 mark. So again, even though it's 983, it's still €983 profit and 12.5% on my investment, so I'm quite happy still with how it's going, and definitely over the long term, as I start to dollar cost average into the likes of Tesla, the iShares Global Clean Energy ETF, etc., and the other 2 or 3 stocks that I mentioned that are in the red, I do feel that this percentage is going to go back up and definitely get over the 1,000 mark over the next few weeks again. But I'm certainly very interested to know how the markets are going to go in terms of the inflation risks and all the other risks around the overall market, which are a constant kind of on the news. So again, I'd be very interested to know in the comment section below, firstly, your plans going forward for your overall portfolio. Are you going to buy or sell any of your stock? And second of all, if you believe we're currently in a market bubble, and if you're starting to get fearful and potentially selling your overall portfolio. So thanks very much, guys. That's the end of today's video. Enjoy the rest of your Thursday, and I'll see y'all in tomorrow's one.